Welcome to Wella Education. In this video, we are going to share 8 tips for better financial management. The first tip that I want to start with is a tip that highlights the relationship between sales and expenses in profitability. It's important to acknowledge that there are different ways to increase profitability. You can either sell more or you can spend less. I want to highlight the magnitude of the difference between higher sales and lower expenses and the relationship between the two. A great businessman that we work with puts it this way: sell a dollar, keep a nickel. Save a nickel, keep a nickel. Let me go a little deeper for you to demonstrate the power of being smart in your spending. Let's say that you have $1 million in sales and your profitability is 5%, which equals $50,000 in profit. Your goal is to double your profitability to get to $100,000 in profit. You have 2 ways to accomplish this. One way is you can increase sales. Now you'd have to double your sales to a total of $2 million in order to increase to $100,000 in profit. Or you can keep the same amount of sales and find a way to save $50,000 in expenses to get to $100,000 in profit. Expense management may just be the faster route to $100,000 in profit. That being said, tip number 2 is that nothing happens unless something is sold. We still need to have a hyper focus on revenue at the same time that we are focused on expenses. Sales are key. No sales, no money. It's that simple. Tip number 3 is be frugal, not cheap. This was the subject of a dinner conversation the other night with some close friends of ours, who I very much appreciate. They're frugal, but by no means are they cheap. They never get petty and account for every penny when it comes time to split the check, because they know and we know that that takes away from the experience. It's a good philosophy to look at in your relationships with your employees, your vendors, your customers. Being frugal is something to be unapologetic for. It's wise and it's a great value. Being cheap can go into the mindset of almost cheating people. We never want to be in a position to be viewed as cheating people. Tip number 4 is vendor loyalty. Obviously, we need to pay very close attention to costs and make sure we get the best price and service we can from our vendors. Many of our vendors are small businesses just like you. It's good to give priority to your current vendors. If you're thinking about making a change, try to give your current vendors the opportunity to meet your needs whenever possible. Tip number 5 is be unapologetic about having a profit focus. I know there can be a stigma about profitability and being successful. At the same time, it's in everyone's best interest, especially your staff, to have good financial practices and a focus on profitability. Tip number 6 is be aware of perception. Your staff thinks you're making a very high profit percentage. We know this because we ask team members all over the US, how much money do you think is left for the business after paying all the bills? We get responses anywhere from 30 cents to 60 cents on the dollar, when the reality is probably 3 to 7 cents. That's a huge perception gap. In the absence of information, your team will make up their own stories. Be sure to share enough information with your team about the finance function of your business so that they have an accurate understanding of where the money is going. Talking about the numbers helps everyone. Speaking of your team, tip number 7 is focus on your highest ROI. Your highest return on investment, hands down, is staff engagement. Finding and keeping staff is the most important thing you can do with your time and resources. Make sure that your team is connected and that their hearts and minds are in the business. The most important marketing you can do is internal marketing. Marketing to your team. Market to your staff what a great opportunity they have to be on your team. Be sure they know that they are important to you and that you appreciate them. The 8th and final tip is you've got capacity, and you probably have a lot more capacity than you realize. We've done studies where we look at how many hours a business is open and how many revenue-producing areas there are. Most businesses operate at about 29% capacity. That's a fraction of what they have available. Also, capacity is not just about space. Another area we see businesses using very little of their total capacity is technology. With all of the technology available today, there's incredible tools you can leverage for your business. The majority of us are using about 10 to 20% of the features available with our technology partners. Do a technology audit and see how your current partnerships can impact your business in greater ways. There you have it, 8 tips for better financial management. We hope that you're able to take some of the tips and put them into action in your business. Thanks for watching.